Trading. Whichever way the market goes, oil and gas traders find ways to win. In the most recent down cycle, traders won big, with margins per barrel tripling in the past 2 years. Taking advantage of market volatility, arbitrage, contango, and storage opportunities, traders have posted some of their highest ever profits. Gunvor recorded an all-time high of $1.25 billion in net profits in 2015. Vitol had one of its best years on record, with a net income of $1.6 billion the same year. Trafigura pulled in $1.1 billion in net income. As a result of the market conditions, a new breed of independent commodity traders emerged, with these smaller traders taking advantage of price volatility to expand their global reach. Backed by private equity and sovereign wealth funds, the independents gained the financial strength to move more product and diversify. In one of the most visual moves of the ability of traders to turn a profit, hundreds of tankers anchored offshore in the summer of 2016, holding up to 95 million barrels of oil as they waited for prices and demand to return. This was the highest level of floating storage since 2009. Nations with a lot of storage also reaped the benefits of a price drop, stockpiling petroleum products on the cheap. South Africa's 45 million barrel strategic reserve, one of the largest in the world, is filled to capacity. But storage depots in Africa are few and far between, with most countries unable to stockpile as they lack the infrastructure. And a lack of refining capacity means that even the continent's largest petroleum producers export their crude oil and import products. The acute infrastructure deficit stimulates yet more trading activity. Some traders are now diversifying and securing supplies by backing production infrastructure, like Vitol, an investor in Ghana's offshore Sankofa project, which will produce oil and supply gas for domestic use. The market has been tighter in 2017 as prices stabilize. Even before this, supply and demand began to realign in 2016, leading to fewer arbitrage opportunities for traders. But in a less volatile market, traders are still adept at adaptation. They will continue to find ways to profitably bridge the gaps between Africa's producers, downstream industries, and consumers.